Yo, what's up? Here's my metals idea for the week. So let's get right into it. As you can see on the daily and weekly, we're just in a higher time frame consolidation range, which is suboptimal. But when you're within these types of ranges, you just refer to clean internal models. For example, this daily model that I wanted to showcase that played out just now. A lot of people I know took this exact trade, but it was in Asia, so I personally couldn't take it. Nonetheless, let's just recap it. As you can see here, we're trading within a clear consolidation. On silver, it's even like better. If you just look at the 6 hour, we're printing like four inside bars within this 6 hour candle, so that's just a clear consolidation. We can easily identify the high and the low, the range extremes. So these are going to be the levels that we're going to be anticipating a reversal to format. Gold essentially leaves this unestablished low because it's not of anything that relevant. Even to the left, it's a pretty unestablished low. However, we do expand and we expand into the consolidation high or these failure swings. So right after we take them, which was on July 30th, the 6 a.m. 6 hour candle took it on gold. However, it did not reverse. And since we print a pretty close proximity SMT with silver, we wait until silver breaks that SMT because we know we're not reversing based on the phases of price. If you look at the hourly, we're consolidating. So when silver breaks the SMT with that relevant high, we get a very nice sequence. That sequence is a two-stage PSP in the form of a strength switch. Now, why is this a strength switch? Well, when we look at gold, since gold took the high right here, it is defined as the leading asset, and silver is the lagging asset. So since gold is the strongest asset, and then it prints a consecutive candle S&T and a PSP, a bearish PSP, that itself is a strength switch because gold is switching to the weaker asset to reverse, while silver was momentarily stronger in order to break that SMT, which we know is a pretty high probable reversal sequence where we place the initial first SMT, but then we place the two-stage SMT in the form of an SMT break, which is this level right here. So with this clean sequence, we can just mark out our invalidation. So that's going to be EQ of this 6 hour candle. And we drop into like the 30. We can just wait for a gap to form, and then this will be our universal sequence, right? Something in here to short. And now the first like pretty much guaranteed draw is this external to internal move. So targeting this gap is essentially the low-hanging fruit. So once that gets hit, we don't reverse off this gap whatsoever. And we continue until here, until we take this internal low. This level is always important when we're viewing higher time frame models, and it essentially validates the model if we fail to manipulate an internal low or an internal high to the range. Think of it like this, right? Let's say we're expanding and there's internal here. We print a few failure swings, phase of price support the idea, but then this is the internal high. We V-shape out of here, we CSD, we hit the internal high, and then we start consolidating or retracing. This right here is the failure to manipulate signature, and it essentially validates this whole internal to external market maker buy model. So that's exactly what we get here. Even though we do get an SMT here, which is not like ideal, but it's still completely fine, we just had to monitor the phases of price. So we just play the next 6 hour candle, and we can see that it printed an inside bar, which an inside bar is mechanically defined as a consolidation, and a consolidation is a continuation signature most of the time. The same goes for silver here. I marked out this as a sort of fake SMT. I always mark SMT like this with red so that I know which I'm anticipating to break. And why am I anticipating this SMT to break in the first place? Well, because we're delivering off a relevant level, which is right here, with an SMT sequence, with the phase of price supporting the whole idea, right? Clear expansion. So when all assets expand away from a relevant reversal, they typically hit the same draw on liquidity, which is going to be this model draw. It's essentially an OPR low, order pair range low, the consolidation low. This is also another confluence on why this SMT is also unlikely to hold is because it isn't even a relevant low to begin with on this pair. It's just a random failure swing in this whole consolidation. So once we see this SMT form, we watch the phase of price, and we notice that we cannot reverse higher, right? This is not a reversal signature. Notice how sluggish this move higher is, and then we sell back down. And time also matters here because especially on the metals triad, during PM session we do not typically get a whole lot of volume. So the timing here of when this expansion ends is also very important. And we also leave this open gap on both pairs. Now, this gap is extremely important because it is the refined key level for the daily. Since this daily candle is a C3 closure, we just mark out the EQ and find a refined key level, which could be a gap or a relevant high on the 4-hour time frame. We can also look for the relevant highs on the 1 hour. This gap essentially our refined key level. We have to see a reversal form here in order to validate our trade idea. If we start failing to manipulate this gap, then the whole idea isn't validated. However, with the narrative we've built, I'm already anticipating this gap to be high probability and highly likely for it to hold. I even marked out the 6-hour model, which is just a consolidation model. So we know that we have a model inside a model that both support the overall idea. So that's always more high probable. And this consolidation high also aligns with that 6-hour gap. So that's just perfect. And yeah, essentially after the week opens right here, I'm anticipating it to open high, not establish any sort of relevant reversal here, create an S&T sequence here, for example, like this, doesn't matter, and then show displacement away. If you don't want to trade this to reversal, you can wait for the universal sequence via the first higher time frame gap to print after the reversal, and you just trade the low risk sell right here. I find this narrative extremely clean, and I'm extremely confident that we are going to end up hitting this OPR low on both pairs on silver and GC. That's my entire outlook for it. I hope we can get a trade off this. I might even stay up till Asia, which I do very rarely, but we'll see.